Hello, this is Michael, stock analyst with Long Wealth Capital. Today is Monday, September 8th, 2025. The SPY closed today at 648.83. Today we're looking at ZIM Integrated Shipping Services, ticker symbol ZIM. It has been in a downward trend since November 2024. In August 20th, they had an earnings missing both earnings per share and revenue, which has brought the share price down to an intraday low of 13.13. So we're going to be very cautious in this investment. One way that you can do that is minimizing your total investment in this one specific company to less than 4% of your total portfolio. The other way we're going to be cautious is to actually wait for some market volatility or other that allows us to start an initial investment down here at 12.65. The other way we're going to be cautious with this is a cautious dollar cost averaging approach. So we want to reduce the amount that we're putting in at the initial level at 12.65 to 15%. And then we're going to increase that percentage each time it drops significantly to dollar cost average in. So our next level will be putting in 20% at 11.4, 30% at 10.05, and 35% at 7.55. So if that were all to transpire, we would have a dollar cost average down at under $9.50. As far as our exit strategy, I recommend exiting when it gets up to 13.4. And or you can always take a partial exit or full exit whenever you are up on your portfolio 3 to 5% for this one stock. So that's another way of managing the risk. So looking at the pros and cons, for ZIM, they have an unusually high debt to equity ratio of around 1.5. There's also been a lot, with the tariff news and that has reduced the total volume of shipments and put pressures on revenue and margins. And of course, all the tensions, all the fuel costs, all are potential negatives for their operating revenue and margins. However, ZIM has a very low price per sales ratio, which is significantly lower at 0.19 compared to their competitors. It also has been able, despite these issues in the last year, it has been able to maintain a free cash flow between $1 billion and $4 billion each month. So utilizing this cautious dollar cost averaging method and waiting for ZIM to come down below its recent lows for an initial entry should help manage the risk of this investment. When it gets back up to 13.4, we want to take our initial exit. And or if you're up 3 to 5% at any given time, you can take partial profits or full profits. Thank you very much.